Hey, what's going on, family? It's your boy MC Fire coming at you again with another Sunday recap. We are definitely diving in. First things first, I want to tell you guys thank you for joining us. For all you ladies and gents, we love tapping into the market. And on the Sunday videos, we typically like to kind of recap the overall market. This is the kind of day that you can ask me questions and see like system questions, technical questions, fundamental questions. This is that kind of day. So if you see something you like, make sure you drop it in the comments. I'll make sure I get it in the next video or the next market update. The comments are turned on, so definitely drop your questions there. Without further ado, let's dive right in. So we typically like to just jump off, kind of give you a snapshot of what the market's doing relative to the SPY. The SPY, SPY, Standard and Poor's Index, is the black line, and it's kind of in the middle there. So most things are kind of tracking below that line, but there's a couple things that are tracking above it. In particular, XLC, really the financial sector, communication services, and info and tech. If you deselect everything from there, the only things that'll be above that black line are the ones we just named. So we'll deselect all those, and then you'll see everything above that line is kind of trending way above the SPY. So we typically like to look at the long-term trend and identify, well, what typically trades above market. If you want to get better market returns than the market, my guess is you probably should look at things that on average trend better than the market. Really, communication services and info and tech have been doing that pretty consistently. So I would say that's probably your best bet. Here recently, the financials have been trending up there with the big boys, so just keep that in mind. They're now the new leaders. So with the pullback in the tech sector, that could change. But if we're looking at some of the laggards, I'm going to deselect all these guys and look at consumer discretionary industries and consumer staples and materials. You're noticing that a lot of the other guys, the in particular industrials, is right there trading with the market. So if you want to get normal or standard returns, except for like in this period, you will trade kind of with the market. There is some consumer staples and material that's kind of lagging, but have since started to push with the rest of the market. So deselecting those, if we push into energy and real estate, I think this is probably where you could find some of the most value, because energy has been really a laggard. So you could have got some really good deals in energy with the right transition, with the right signal, with the right trend change. We'll look at that. This is what this day is kind of all about. Taking a look at value. Also in the real estate sector, a lot of value to be gained over the last year. It was kind of neglected while everybody was hopping into kind of info and tech. So if you compare the two, right, you're seeing that info and tech really kind of took off, but real estate kind of took a hit. Kind of like really some divergence between the overall SPY market, info and tech, and real estate kind of took a hit there. But everything is kind of trending and tracking upwards. Moving on, we got healthcare and utilities. Not really much to say about the utilities, but there is a lot to say about healthcare. Maybe you can find some real value in healthcare, as it's probably one of the lowest ETFs and is taking a hit relative to SPY. So it's just something to think about if you're looking for value. Real value. You want to kind of buy things when they're low, catch them on the trend change. That's where your value is going to be. If we hop over to here, I already have pre-selected for you guys kind of how I see the snapshot, and really it's more along the lines of just quickly taking a peek at, very similar to the bar charts that we had, but very quickly taking a peek at what the overall daily trend of these markets are. So like we were saying, if you have like XLV, where's our XLV? It's here somewhere. XLB, XLF, XLY, XLI. We could throw it on there. I think we have XLE up here twice, or we have something. Yeah, XLF's up here twice. So let's hop XLV there. Boom. I knew something was up there twice. Yeah. Let's open this up here. Kind of maximize. So as you can see, there is a potential opportunity on the daily to go ahead and take a kind of post trade, let's say you wanted to be a value buyer here, buying above these guys, this is kind of where we let it go. You as a buyer could find real value if you want to buy and hold. This is actually a pretty decent trigger, even if you take a look at it on the weekly. Pretty decent trigger here. Actually, we'll go ahead and get rid of some of these time axis lines. I don't know why they're showing the rollover lines, but we're gonna get rid of them. Shout out to us. So on the daily, so let's pull up this on the weekly here, and then we'll pop back to the daily. As you can see on the weekly, kind of a negative trend starting back here on the weekly. So if you could see that, hey, if it's kind of a negative trend on the weekly, you kind of skip over to the daily, you'll be like, oh man, might be an opportunity to buy the bottom. I don't necessarily recommend buying the bottom, but I do know that some people like buying the bottom. Me personally, I like the system that we have. You take a weekly time frame, it's negative in the weekly time frame, and in the daily, there's definitely an opportunity to catch some people slipping, even in the healthcare sector. We actually did take a short here, roll it, and then roll it again, and then took it off as it triggered above. And it kind of, the system worked really well, right? We made massive profits there, really good follow through, and let it go on the blowout, or rolled on the blowout candle, taking profits as it got to a very nice profit level, taking profits again as it got to the what we call blowout candle. We'll talk about that some more. And then as it bounced and crossed above these guys, we wanted to let it go, which is actually pretty nice that it did, because it did trade above this support line here and continue to rip into the daily wave. So not too bad there. But if we're going to look at like the rest of the overall market, as you can see, this is the only one that's double yellow. Well, XLB is as well. Sorry about that. So you could find real value in XLV and XLB. So and if you want to actually find juicy value there, let's see if we can't. I don't know why it's being slow here, but we're gonna go and take a look at XLB right now. If you guys find it before I do, hats off to you. There it is at the top. Look at that. So I kind of use this a lot, but I pre-select a lot of the setups there, so that they are a lot of the tickers within this flex grid, so that we can quickly kind of pull it up, and it's just a good way to look at the ETF, kind of peering under the hood and work top down. It's loading, taking its sweet time. Bear with us. It's waiting for data. It's waiting for more data. But while it's waiting for data, let's go over here and take a peek at take a look at this bad boy right here. So what I like to do also when we're taking a snapshot of, let's say, the market, is within our handy dandy Qualtrum. This is not mine. I did not build this, but the individual who did is a godsend. Definitely a blessing to that guy. So if we're gonna go take a look at the XLB or XLV. Yeah, I have that. Let's take a look at the XLV first, just for illustration's sake. You could see what I have here is essentially a 200 days moving average pulled up. It's like, hey, is it below or above the 200-day moving average? It's basically the whole sector kind of in a downtrend, and what are the outperformers, right? ISRG, SYK, we've taken a couple plays on that. ABT, Vertex, and then ABBV, right? As well as kind of in the neutral category, UHN. So when we go back over here, we'll pause on XLB real quick, and then we'll take, so it can kind of show you what I'm talking about. We'll pull up XLV. I don't know why XLB took forever, but XLV should come up no problem. Where's all my stuff at? Oh, here it is. Healthcare. It's like taking all day trying to pull up, man. Sorry, guys. So sorry. Yeah. So XLV, as you can see, on the weekly trend, right? The overall weekly for the ETF, we'll maximize that for you, and then we'll jump down to the daily. It kind of is telling us, hey, the overall weekly trend is to the negatives, as I showed you guys before. We took action on this play, and I would say was a Grade A execution, grade A setup, really, really nice. But if you notice, a lot of the other positions like J&J and which have you, they're definitely in the red. So it's just something to track on the weekly, right? You have this time frame break saying, hey, you are definitely in negative territory, look out, right? And it's kind of like that across the board, ABBV, all the good stuff, right? So just keep that in mind. Like if we jump back over, this is what I'm talking about, right? I have a quick snapshot to quickly find value. So UHN, right? That one's neutral on the dip finder. And you can see if we flip back over that this stock is actually looking not looking too bad relative to its 8 period, 21 period moving, and 50 moving average. Moving averages are stock stacked positive, and they've kind of been positive since 11/6. So that week or that day, so to speak, right? Since this point, I'm not going to keep that there, but we want to go ahead and I just wanted to kind of make the mention of that for you guys. It is potentially a good play to catch on the dip, wait for it to come to you. But it's something like if you're looking to put something on your watch list, look at the outperformers. But overall, it's definitely in the laggard category, right? I wouldn't sit here and say that, hey, this is a buy when it's not. So just kind of think about just because there's value, things that are low can go lower, right? It doesn't mean that just because it's low, it's going to start buying when you decide to get into the market. The market's got a mind of its own. Price always has a say. So keep that in mind. We do have Merrick kind of in a downtrend pulling up here. So these are just some to kind of keep in mind and watch. As I'm just cycling through here, I'd be like, man, the whole sector is feeling it. But you do have some outperformers. And so you could just kind of see that quickly with the snapshot of who's underperforming, who's overperforming, who's really dragging this down. Even in the daily, you can kind of see it. So ABT is doing pretty good. Bristol Myers Squibb is doing pretty good. And then who's actually lagging. So if you're looking to buy value in the sector, right, try to buy some of the outperformers. Because let's say the sector does start to pick up, these outperformers are just going to really run. Typically, that's how that works. Doesn't always work that way. Price always has a say. So, and fundamentals and news and earnings, all that good jazz, right? So just keep that in mind. If we're hopping back to our grid there, right? If we're hopping back to our grid there, overall, I do have it set on the daily. I'm just kind of looking for potential setups on ETFs. They don't happen too often, but when they do, they really are something special, right? So if we take a look at the right here, now I do have dual moving averages pulled up, but a lot of times if I'm looking for value on the daily, you might take a chance buy at this. It's not necessarily something that I would advise. We took the appropriate setup, which is waiting for the multi-time frame analysis on the weekly, right? Took the buy, took the roll, and we're still actually in the play. So shout out to us on that. We also did take the play a little bit back here before we kind of developed the system. So shout out to us on good trading and great profits. We love our profits, but pretty much most of the stuff isn't really you do have XLB setting up here, but it's kind of got a golden cross. And if we go take a peek at it on the daily, that's kind of where we want to make the money, is on the multi-time frame. We'll go pop over there and go take a look at XLB. As you can see, looking pretty good, I would say. It's been an uptrend for a hot minute, and on the daily, it's not. So there actually is a setup here on XLB if it crosses above 95.19. So I would say, just keep that in mind. This is why we don't put stuff on the daily. So this is what. Let me go back here real quick, because I just did that. So if you can look at XLB, we put this is a daily, and I marked some of those lines. Those are not supposed to be there because they are for, those major lines are kind of for the weeklies. So this has kind of been an uptrend for a hot minute since right here. So that those lines should be right here. Don't want to conflate that. I want to make sure that we are keeping in step with weekly time frames because we want bigger winners. The trend is identified by the week, not by the day. So the daily fluctuations are cool and all, but the weeklies are better. So you see here on the weekly, this is telling us, hey, we're in an uptrend. Here's a setup right around here. You can take that position with a stop out at the low. It's kind of a wider stop, but you can set your position up accordingly depending on what kind of options. It doesn't have to necessarily be naked. You could be selling. You could be buying verticals. You could set a butterfly. That'd be a good way to play this and then ride that puppy to the moon. It does actually run, so it would have been a pretty nice setup uh, post that bounce, right? Definitely in line with our setup, but this is before we actually developed it. So the new setup, as it stands right now, you're already kind of in play from my mentor standard. It's above the 8 period moving average, above the previous week's high. You could technically have a case to already be in this play with a stop out of the low here. I like to keep my stops a little bit more tighter. So if it breaks here, we would stop out, respecting our buyers as a 2-bar professional. Okay. Good stuff there. So we do actually have a list and a lineup of things that we definitely want to cover on this Sunday. I'm really kind of excited because we're about to go into a new year, and really fourth quarter and first quarter for fundamentals is probably the most important to the market. That's why you see a lot of slump in second quarter and a lot of slump in third quarter. But that's when kind of everybody goes and takes like their 3-month vacation, take their quarterly vacation, and you see kind of a suck in volatility. So if we're looking long term, we definitely want to make sure we're on the button in fourth quarter and first quarter. We've kind of been on the mark in fourth quarter, but in first quarter, we definitely want to see how the market reacts, what new products people drop going into 2025, and what companies have in store as regards to news on what they plan to do to make this year better than the last year. Right, so we kind of went over all the ETFs, kind of to see the value. But if you want, actually, we'll do this. So we have the ETF tracker kind of here. Let's go take a look at some of the outperformers and see if we could find any value within the outperformers. So we'll go look at we'll start out with the XLF. Boom. Shout out to the XLF, right? Weekly chart here, and most of these are set on the weekly. We just kind of want to see, is there going to be like a real trend change on the weekly? If not, then if you're not going to have a real trend change on the weekly, is there any value, right? And the only value I can really see, anyone who's lagging but still in the sector, everyone's really in the stratosphere. So it's kind of hard. The newest member, I guess, with SPGI, right? It hasn't broken relative highs, whereas everyone else is kind of pinging at highs or at relative highs. So SPIG is like the only laggard there. Let's go take a look at that guy. SPIG. Did I oops. Sorry. Oops. All the oopses in the world. SPGI, sorry, that's why. Boom. You're watching me completely mess this up. All right. So long story short, is definitely in a defined uptrend. Been in an uptrend for a hot minute. Any dip buys, the dip buy that you could have took for, and we got this trigger, but we just chose not to take it. It was here with a long stop out. I believe we didn't want to take it because, again, we're trying to scale out of a lot of plays. So getting into this actually would have ran pretty nice to the upside. It would have caught these guys right here slipping. Would have stopped, long stop out on the wick. Would have give you nice, an okay risk to reward. Kind of the longer the wick, the wider the risk, right? And in this case, you kind of want something like this or something like this, right? And if we're looking on the weekly chart here, the uptrend kind of started back here. So yeah, in play here, definitely in play, but still a little risky. So the two positions that you would have took would have ripped here, one ripped here, and then boom, ripped there. Potential rip there, I should say. So we'll put a green mark there. But not necessarily. This is the only reason why we're taking a look at this, because this one hasn't hit relative highs. So it is the laggard of the group. you would be trailing in the position really to kind of get in. You're late, really late. So I wouldn't necessarily take a peek. But we are, it's good to see what's really going on. That's XLF. We're going to take a peek also at the XLK and the XLC. So here's XLC. This is your Metas, your Googles, right? Your, again, a little bit of the same. We do have some pivoting in Disney and Verizon, as well as Comcast. So let's go look at, we made really good plays on Carter here. We actually profited from a vertical and a butterfly. Both of them hit. The butterfly, we exited right here for amazing profits, and the vertical actually went as well. We ended up rolling here, and the said pullback did happen, so we went on and exited. But it since did push some more, but really didn't push past where we rolled it. So shout out to us for kind of locking in a lot of profits and catching this massive move. We can go look at that on the daily CHTR here. And this is kind of what we're looking for. This is kind of the setup that we want, guys. As you can see here, profited quite a few times. It wasn't the only time, right? So taking positions here, and then definitely really cutting the cake here with this very nice. This is what I'm talking about, like low risk candle. It means you could get stopped out easy, but a lot of times, because of the setup and the fundamentals underneath the setup, the ability for it to get stopped out is kind of minimal. It does happen, but we put our butterfly. We'll kind of go through the process here. We put our butterfly kind of at highs. We were expecting it to hit highs, and or relative highs. So kind of this kind of window here. And when it did that, we were like, okay, it has more time to run, but we're just going to go ahead and let it go for a very nice healthy profit. I think it was like 200% on the butterfly or 150, something crazy like that. We also had a vertical at around the same time. This was a prime setup. So I felt a little bit more comfortable putting a little bit more risk on the table. But you have these really nice setups that just kind of come in here and kind of sweep you off your feet, catching either a trend change, nice little dip, where it's respecting the 8 period moving average or the 21 period moving average, right? And then taking off. Or same thing, coming in here, making a very like pronounced bear flag. Not really, but that's how I see it. But then giving us very clean setup vibes. You actually could have took a little setup right here. Wouldn't have worked out too well, but the one we took was exceptional, and it had actually been trending sideways for a minute. So catching the earnings as well as the butterfly and the roll with the close was phenomenal. We actually need to make that green because it is a buy that we closed. So, and it's really shouts out to us because we took it off at that sign of danger, and that's kind of the point why we set it up like that. If it runs cool, you start taking profits at the first sign of danger, and if it keeps going, well, you just look to the left at what potentially could be the next sign of danger. In that case, you're getting pivots back here. So that's kind of where that's the reason why we took it off. There's other pivots up here, but we didn't expect it to do that in a very short term. 3 ATR is kind of what we're expecting to keep it inside that range, right? So shout out to us there. What else we got? So that's Charter. Comcast is kind of in the same boat. We can go take a dive at Comcast. Let's do that. That is CSA. And shout out to them. So we did actually take a position when the trend did change. I guess back here, what is this? 812. Right. We did take a position. Kind of around the same setup. Right. It kind of went and it was above the. Both setups kind of were in play, so above the 8 period moving average and above previous week's high. So we did take that, and we also took the fact that, hey, there's red, a lot of follow through there. We went on and took it off after 3 weeks. There was a lot more money to be had on the table, which you would have been a sniper for it to do that. So really, the setup is kind of right here. red come in, boom, you take the position, and it is kind of fighting to get back up the highs. That's ideally the way I'd want to play it, with a stop out below here. And it makes sense too, because at 4202, that is the support level that you would watch for the break anyway. So just keep that in mind, right? Those are the two laggers there. You also have Disney as a lagger and Verizon. We'll take a look at both of those. Kind of a big fan of Disney. Did miss that push there, but it wasn't really much that you could do to catch the push. If you notice, it was kind of trending sideways. So unless you're taking our traditional setup, right, above the 8-period moving average and above previous week's high, you would be getting in at around this level at 96.81, right? 96.81 break, and looking for that real big push, right? And so here you would probably be looking to take that buy, and then you'd catch the windfall push on Disney, right? Really, the setup, the edge wasn't there necessarily, but it was there for for the earnings play, right? Disney's starting to really push based off earnings there. So I believe we took a position here, got stopped out on Disney. Wasn't too fun, wasn't too happy about that, but it did rip, and we took the short, and it went against us. That's the way it is. Luckily that we're 2-bar professionals, because if we were bag holding, we would get caught in all that. So that's kind of the point of why we keep to our rules and our setups, is it not only protects you, or it not only gives you profits, but it protects you. It protects you having very clear defined rules. It protects you from bag holding, right? And just waiting for it to come back down, because it rips. You gotta at some point, it's better to say you're wrong early than to feel you're wrong in your gut late. But going back, Disney definitely threw a setup candle here, and after the break, really did run. So there was opportunities to definitely lock into the stock. You could have gotten here as well. We'll stop out at the high, would have ran. So there's a couple opportunities for you to get into that play, where you could have made a very nice profit, where you're not revenge trading Disney, right? You are your worst enemy in trading, so having good rules is your best pal. Let's go look at the second one, VZ. So looking at VZ, Verizon. You can take a peek at that. Shout out to VZ. Just gonna look at just raw price action here. Verizon not looking too shabby. Not looking too shabby at all. Definitely an opportunity to get into VZ. We did see this again, same narrative. Didn't want to necessarily take this position, but it looked very, very healthy. Very nice pullback with very clear push off the break. So this would have been nice. 1, 2, 3, 4, 5. So just on the edge of our edge, right? We typically like it to be less than 4. Sometimes we edge out at 5, stop out at the low, let it run. If it goes, awesome. It should, and when it did. Basically, our entry would have been trigger above 41.21, looking to take some profits at first sign of danger being 42.9, and then you kind of letting it go from there. So our first roll would have been around this area for a nice 2-to-1, and then a push. We're looking at for it to push or break highs, second sign of danger. This is really the next sign of danger, but if you see something like this, like a blowout candle, you almost look to roll it there after the blowout candle. That's kind of how I would play that if I'm looking for the setup at that point. What else we got? That's pretty much it for the XLC. Let's go take a look at the XLK. Not gonna be too picky here with the XLK. We've already kind of been in the XLK, but there are actually some potential setups. So we could take a look at the XLK. Microsoft is kind of struggling on the momentum there, but the trend's still neutral. In AMD, these trending sideways, definitely watch out for that. Definitely watch out for that. QCOM not looking too good, and then you've got Adobe not looking too good. But for a positive note, right? Apple definitely in a ascending triangle. So we're going to take a look at all those: Apple, Nvidia, Microsoft, AMD, right? We're going to take a look at these, and we're going to also pop down and look at QCOM. Also looking at XLK, that is also in what seems to be a relative ascending triangle. So if I go ahead and mark the highs here, boom, right? There's your triangle, right there, right? Overall trend resistance kind of at the high. If it breaks, look for it to really run. I really believe it can. Kind of a similar story for Apple. I actually put the trend line there. There was a break there. So again, this is an invisible line in space. Doesn't necessarily have to agree 100% because price doesn't necessarily have to stop right at your invisible line. It is an invisible line in space. I don't know why people think, oh, it's a trend line, it's got to bounce. No, it doesn't. It doesn't have to bounce. It could go wherever it wants to go, but it helps us visualize. Hey, there is a trend of buying pressure, and that's kind of what you want to know. People are looking. Is there demand? Is there buying pressure? Could fail even, but it being at highs after a 1, 2, 3 test, I could see Apple really pushing towards highs, breaking highs, and with this 206 to 237, I would say you can look for it to go about $15 to the high. That's kind of the understood average, is kind of half the base of a triangle. So $15 from 237 is probably your next bet, your next best bet. So just keep that in mind. Like, look for it to go 260. That would be a good, spot. 250, 260. That's where I would say, hey, definitely make that, right? But that's a guess though. Don't take my word for that for sure. Yeah, let's go look at Apple real quick. Didn't really give us the edge that we want. I mean, you might have took this for sure. That would have been very nice rip. You would have caught it off the break of 217.11, and then taking it off because of the risk to reward is so tight. Taking off at the right here for a nice 2-to-1. This is a little too close, and if you see this, it's like, ugh. But there has been buying pressure. We did actually take a position in Apple back here, seeing that it had really really respected this 21 period moving average off the weekly. We were like, okay, if it respects it, awesome. It was like an if then. If it respects it, then it needs to break above here for us to take a position. That was the logic. And so he was like, okay, when we're obviously is your stop out going to be at the low, right? If you guys have been watching my channel for long enough, you kind of know my stop's at the low, right? And if you're a market maker, don't help my stop. They don't care about little on me, right? My one contract, right? So you've got this bad boy right here. It's probably your best bet. It probably you're taking that off the bounce here, but would you be okay with that, right? Would you be okay with taking Apple off a 217 and then blowout candle, even right here at 230? I think most people would be just happy with that juicy rip right there. Of course, you'd be stopping out at the low there. So let's take another peek. And so we already took a look at XOK and Apple. Let's go take a look at Microsoft. Money, baby. Microsoft is one of my favorites, but it is, since right now, struggling. It is, if we're calling it like we see it, Microsoft is definitely in a downtrend. Setup candle here did run a little bit, but really it's more trending neutral. The unbalanced volume here is still it's neutral, right? So you've got unbalanced volume that's neutral, right? And then you've got kind of treading water sideways. In these cases, right, I don't necessarily take the traditional momentum plays. You do look to see where the high and lows are at and mark those accordingly. So like, let's say right here, where it likes to trend, you could highlight in yellow as a caution area. Like, hey, there's caution here. It likes to come down to this level, pivot during this time period, and then you could say, okay, yeah, this right here, this actually is more of a cautionary tail, right? We'll put that in yellow for now to see if it breaks. So if it starts to break above or below, you'd want to know. So let's put an alert, right, above or below. If it really breaks above or below the sector, then the momentum can continue. Other than that, this will be on the last of our priority list. We would like to prioritize uptrends, downtrends, and then choppy trends. right? If you catch a choppy trend, awesome. But it's a lot of times you're going to catch a choppy trend in the context of another trend. So like when it's pivoting, it's in an uptrend, it takes a dip, you take the buy and it starts chopping. You probably roll it at the first sign of danger, but then it goes against you. That's what I'm talking about. Prioritizing the uptrend or the downtrend before you prioritize the chop. So that's really what we're looking at there. What else did we say? We wanted. So we got Microsoft. We did Apple, Nvidia. Who doesn't like Nvidia, right? Who doesn't love good old NVDA? We love NVDA. There is a setup here for Nvidia, and typically the setups on Nvidia do pan out pretty decent. We had one that did fail, but same thing with the Apple Play. Once we saw the if then kind of work out in our favor, we were like, okay, if it breaks below, it starts, and if it gets here, back above that danger area, it's already in a really nice spot. We want to go ahead and take the buy because it's Nvidia. We took the buy, stop out at the low, but we did something different. This was a 3-week option, whereas this one was a leap. There is a certain point where I just get what I call buy bias, where I'm okay as a long-term buyer. The deeper you go with the value, the more I will lean towards a buy bias, meaning I'll still have a plan, but I'll still say, okay, all the indicators aren't necessarily there for a momentum buy, but the market's going to figure out pretty quickly, like, hey, this is Nvidia. I can get this at a huge discount. This is like, everyone goes out and Black Friday sale for Nvidia. Well, that Black Friday sale was this day, and we got it on that day, so shout out to us. We got a leap contract that we did roll here at 10.7, kind of high though, but it did since bounce above that, so we're kind of looking for it to continue. For those who don't know, sorry about that. For those who don't know, a leap contract is a contract that you essentially have for the entire year. So we didn't waste time on 3 weeks and taking a whole bunch of rolling positions. We just said, hey, great company, been in a massive uptrend. It's kind of leading the market right now, and you get the opportunity to buy it at a discount. Why not get it? Why not get it for into the next year, especially after the split there? On average, splits, once they happen, the stock is expected, I say expected, based off data. I forget where I got this from. Don't quote me on this, but stocks are expected to rise around 12% after a split. So if you look at like Tesla, Nvidia, or other companies, they do typically rise around 12% after a split. So it did split here, and this is kind of the benchmark by which I say, okay, if you split at 132, I could expect you to rise a good amount of it, right? Another, $13, which it already did, and we rolled it well above that. So that's kind of the logic, but we got it on the dip. So even though it could rise higher off the split at the end of the year, we got it at a great value. That's kind of the point there. So AMD. Let's take a peek at our good old rival to NVIDIA, AMD, or actually in tandem, because a lot of AMD cards and NVIDIA cards rock in tandem. Cool. Definitely downtrend there for the week, and definitely set up to the downtrend. Like, it was a gap though, so if you're okay with getting it at the open in the run, you're in money right now. I would say that if you were already in this puppy, right, your first sign of danger was this line right here for sure, right? If you're a hedge fund, you definitely, your first sign of danger is here. But your first sign of danger, you got this pivot right here. Boom, you already hit it, and you get another opportunity to hit it, right? So I would definitely be looking to roll this position for sure to the downside. You want to stay in the position as long as you can, and make a decision when you get to your first danger area. So this is a first danger area here on the weekly. The next danger area is the next level of resistance down here at around the 119.79 location. So if you're already in there, shout out to you. That's why we kind of don't trade with our gut or with our emotions. We just let the market tell us what it wants to do. This thing has been in a pretty defined downtrend for a minute, briefly taking a break. But if you notice the over here, the 21 period moving average kind of remained what, kind of neutral slash negative. So in that case, you're looking still for a setup, but the thrust, especially if you read Mastering the Trade, shout out to John Carter and what he does over there, Simple Trader. Definitely one of the people that I watched for years to try to get a handle on the market. The thrust is still to the downside in a neutral market. So if you see a rip like this, right, in a neutral market, or even a rip like this, you're looking for the thrust to be to the downside, right? It's not always the rule, but it is a rule that I hold true based off that experience. So again, same thing here. Kind of ripped, thrust to the downside, boom, would have worked out great for you. Here, break, boom, fall through, absolute cannon. Same thing here, boom, fall through. Your stop out would have been the high, wouldn't even have got close, but you would have took some heat on the play. So what do they call it nowadays? Diamond hands. Check that out, right? So AMD's a little lagging, and then we were gonna look at QCOM. Adobe's there too. We can take a look at Adobe as well. QCOM first, then Adobe. Good old XOK. So yeah, clear defined downtrend. Definitely would have been a great position to take. This was earnings, so post earnings you could have took this, would have stopped out really high. It did flush masterfully. Just something to think about, man. You there's plays on the board, but if you have a don't have a system or setup, you're not ever gonna see any of this stuff. Negative here. Here's your setup candle here, goes down, boom. There's 4 days of follow through, so you would have got follow through on the week. First sign of danger, very nice risk to reward, so you would have been rolling it here. It would have went against you, but this is what I'm talking about. The thrust is to the downside. The setup is clean to the downside, with your ability to take profits for a nice base hit. After it traded above here, you probably could have let it go. Kind of what we did for the XLV. Okay. What do I mean? So like once you see a blowout candle kind of at resistance, it's a good opportunity to go ahead and say, you know what, I'm gonna take my base hit. That's kind of what happened here, right? Took a short here, rolled it, right, and then it respected this resistance. It bounced above our setup candle there, kind of our blowout candle there. So we said, let's let it go. And like clockwork, we did save some of our rolled profits. So something to think about there. All right, Adobe. I think it's BE. Yeah. Memory. Whew, nice. Yeah, setup kind of the same thing, but not a lot of follow through. So it is negative, cross negative, did have a nice healthy rib, break below, and it flush. Pretty nice, but there's not a lot of follow through. So if you're still into this position, you probably didn't get the desired result, which is down here. We actually put the mark down there because we just want to know like the system, how well is it doing, the follow through. Unbalanced volume also is negative, so it's just something to think about. You do have the wins at your back, but we don't know price, if it's transitioning. So on the weekly, overall pivot to pivot, major pivot to pivot, it is making higher lows, right? But not necessarily making higher highs, right? Definitely bumped into some resistance up here at fair value. So something to think about. I put a hazard line here because it might come up here, test it. You never know. We'll see. I think that we can go look at ACN as a final because it has kind of a what's it called? Neutral trend. But yeah, very, very nice. Very, very nice. Clean setup right there. You can see it. You've got a nice green trend. The unbalanced volume is a little red though. So that's something that would worry me, right? It's like, hey, why isn't price and volume increasing? But it does have a setup here. So it's just something to think about. This setup played out very nicely within combination of earnings, ripped, kept going. Very, very nice there. A little too wide for my taste. This is kind of the point. This one's wide. So the narrower the candle, the better the edge. Like right here. Even though it's negative, it did end up taking a rip. So you would be actually going the other way, looking to short that rip. From here, we'll put that there, boom, and then we'll put the red, boom. So looking the other way, right? These guys kind of get exposed, goes against them, stop out at the high. You do get stopped out before it dumps. does happen, but as you can see, setup still in effect. I mean, we're biting pennies at this point for the stop. So it comes up, gets the liquidity, and then dumps. Does happen. It is what it is. But here, you wouldn't have to worry about that problem. It does end up flushing very nicely. If you get in here, doesn't flush. It flushes to fair value. Maybe you could take some profits, but really, there's not a lot of room for it to do that. It does on the buy side though give you a very nice revenge if you did get caught up in those two sweeps. So it is what it is. Moving right along. We're gonna go actually take a look at some of our subsequent plays on what we have for the scans. So we'll take a look at SYM here. Uh, a lot. Ooh, that's insane. So definitely what I would consider a pretty juicy buy trigger here. You do have a gap here. Number one, it is a positive territory, and you have decent earnings. Right, decent earnings going from negative to somewhat positive. That can always be good. Doesn't necessarily play that the market respects that because it had that. It ripped a little bit, and then the fall through did materialize into a trend change. Where here, the trend has changed, but slightly. So it's not a lot of, not necessarily a lot there. But I will say that seeing this and then seeing this engulf definitely gives you a lot of hope. So we'll keep an eye on that. Even after hours, the bid and ask is a little high. Let's do this. We'll pull it up. We'll do this. Let's go back. Right. So, yeah, where are we at? Not this one. This is not what we're looking at. We're looking at this guy. Close. Similar names, similar tickers, but not the same. Right. Yeah, already kind of in the 27 mark there. 20 close to 26.90, but kind of pushing 27. So I like how it's pushed on the 10-minute chart, and it just kind of went neutral, which to me is indicating, hey, there could be a lot of buying still left to do. And people really didn't just kind of let go. So if it's sitting here, I could expect it to push going into tomorrow. That's my guess. Really nice buying and catching a lot of these laggard, I would call them laggard seller on the setup off sides. NVTS definitely showing potential. Like there was a break there, and I was like, I don't know, right? Because we do have kind of unbalanced volume increasing. So if it continues to trade, if it gives me a double bounce play there, I'll think I can take it. Because if we take a look in here, it did break, but it bounced back above it pretty nasty. So if it comes back down, I'll be looking to take that to the downside. Right, very nice rip there, by the way. Nice stuff. What else we got? So the 6J got some forex pairs. Not necessarily something that the setup is gonna provide much juice for, and let me explain why. So in forex, right, it's not just a singular entity. It's not just a play on one item. It's actually a play on two. So you've got the yen compared to the dollar. So you're dealing with two economies, and just because you have a massive volume spike in one doesn't mean that there's not going to be a massive volume spike in the other way. It's just it gets too convoluted for the edge. So what I would do is I would trade this from a traditional standpoint, right? Below the 8 period moving average, in an uptrend or a downtrend, above or below the previous week's high. So what does that mean? Let's say, for example, here, this close out the week, you're in a downtrend. If it crosses below the low of this guy right here this week, and it's below the 8 period moving average, take the play, stop out at the high. That's how I kind of would play that. So we can move this up here, right there, boom, and that would be where you necessarily would take that position off, right? I think this is actually the open of this week, so I don't know. Yeah, we'll actually leave that. That's probably why I didn't leave it there, because that is, I believe, today. going into Yeah, that's going in a second. So yeah, can't use that quite yet. Yeah, so 6J, and then you've got ZT. I believe that is the, what is a ZT? 2 year treasury note. That's what it is. 2 year treasury note. So the 2 year treasury note in a downtrend. I know, not looking too good for the treasury note, right, man? Massive dumping of the treasury note. Absolutely massive, right? Something to take note of. Little choppy down here. Maybe there's some buying. I don't see the fundamentals of why, if you did all of that, you're just gonna pick some up on the off the low, unless there's some major thing that happens, like major event in the world, right? Like another war breaks out, and people have a hard time, and they just need protection for their wealth. Buying us notes might be the best thing smoking. So just kind of keep that in mind. It's just a massive drop in the notes. I don't see that it's going to recover just based off the fundamentals there. I think you could chop down here, maybe catch some plays off the bottom, but is there a lot of edge there? Well, I'd say yeah. This did take a position to the downside. Couple blowout candles there. Got to watch out for stuff like that. We run the weekly on the buy. Let's do a little back testing here. We'll take another buy on the buy. But yeah, it's really choppy, man. Really, really choppy there. So here you did get an actual position to go ahead and take that rip to the upside. Another one here. If you're entered, and then boom, nice run there to the upside. This is looking on the downside. Let me make sure that's correct. This is green. Boom. And then this is green. Green, please. Thank you. And then this is red, right? Want to keep to the system. Want to keep it simple. That's another thing too. I see a lot of traders, man. Don't find a simple system. This is not a hard game. I know Wall Street likes to make it seem like it is, but it's not. There's so many traders that you can emulate that make this super simple and effective the way you like to trade. So on the buy side here, there is a setup here right at the trend change. Nice rip. You might not be able to get into that, but you might give the indication of the massive amount of green here. Seeing that, if you got the alert early in the day, you might be able to take that position before it rips, gaps, and goes. The next position here is something up here. You do get stopped out though way back here, but there was a little follow through. I probably would end up in a stop though for sure. You don't necessarily get another step till right here where it does end up gapping and going. So not a lot of like leeway to get in, but here you do actually get in a position where it does gap, or it does set up, and then there is some real follow through there. So that's good. A little follow through. The 5 year treasury note, probably going to be a little bit of the same there. Not too much happening, but we'll go ahead and put an alert. It actually is past the edge, so we won't put an alert. 1, 2, 3, 4. So not a lot of follow through there either. If we go look on this, we already kind of took a look at Microsoft. It is in a position where, again, very choppy trend, and we kind of want to know if it's going to break higher low. We are going to know if it's in play though. So if it chops high, we want to know. If it chops low, we want to know, because this could have a major impact. Again, Microsoft makes up a huge chunk of the holdings for, I'll pull it up for you guys here. Large chunk of the holdings for the XLK. So if we come over here and we take a look, I believe we're in the energy sector. We're going to pop over to the XLK here. XLK and the Qs. Boom. Technology sector. Go down and look at the holdings. This is on ETFDB, guys. This is actually free for you, right? I didn't have to buy anything crazy. So 12%, 12.98% of the overall XLK ETF. That is massive. Yeah, Apple, Nvidia, and Microsoft essentially making something insane, like well over 25% of that mark of that ETF. So heavily weighted. If you got that moving, you also probably it's heavily weighted in the Qs as well. So if that starts moving, the market starts moving. I'm gonna tell you right now, that's basically how that works. It's kind of dragging everything down. Microsoft making up 7% of the Qs. Keep that in mind. If this moves, Nvidia moves, Apple moves, we want to take a look at that. Also, let's go take a look at Amazon because we didn't take a look at that. We want to take a look at the big movers. Since we're talking about it, let's pop over and take a peek at Amazon. Nice, very clean setup for Amazon here. You didn't really have an opportunity for it to go. It kind of gapped and just went. But yeah, there was a setup off of earnings there, so it wasn't out in the open, not open waters, but hey, setup's a setup, right? In an uptrend and kind of halfway between the 8 and the 3 ATR mark, so definitely power trending there. If you got it, hold it. If you don't, would be looking to buy it right here. That's for darn sure. But it's fun to see, right? Shout out to AMZN. Shout out to Amazon. Moving right along, we've got Oxy, right? Shout out to Warren Buffett taking a juicy position in Oxy. I'm not sure if he still has it, but last time I heard, the big Warren was he was in Oxy. He was buying it on the dip, and it paid him nice. Warren Buffett gets the benefit of the what they call the Buffett bust because Buffett buff because he gets almost a 5% buff just because he buys it and his name is Buffett, right? So shout out to Warren. That is not green, that is red. Thank you. So yeah, is there an opportunity to take the short here? Stopped out here. Stopped out here for sure. Got into play here. Stop out of the high. Definitely nice payout. Almost 3-to-1 risk to reward here. So it for me it's 3 strikes you're out, right? Once you play games with my emotions, you get a glutton for punishment. 3 times you're out. But after this one, stop out at the high. Would it have some nice follow through? Boom, boom, blow a candle here, blow a candle here. Definitely look to roll after this one or this one. And definitely after this one, once it bounces against you, because it's tight, it's gonna be a rip for sure. So and it's at 3 ATR at that point, so just something to think of, something to keep in mind. We've got RUN. I don't know RUN. Definitely to the downside here. Boom. Not one that we necessarily see a lot on our radar, for sure. But definitely would have called the earnings play for sure. These earnings play on these gaps and goes are almost massive. But you got to be careful though, because if it's an earnings play, what's going on? Increased volatility and the premiums are going to be a lot higher. So post that earnings, you're going to get a vol squeeze. So if you're buying any kind of naked options or vertical, you're going to get vol squeeze. So selling options might be your best bet, or even butterflies is actually not a bad bet either, to make massive profits there. I think that's partly the reason why we made a good profits on CHTR. But yeah, if you're worried about vol squeeze, just throw a butterfly on there, and if you lose, you don't lose that big. You got DuPont, right? Shout out to it. Very, very nice, clean. From the old traditional setup, right? You have above the 8-period moving average right there. Boom, you take the buy, stop out at the low. You're good to go. Not the rip is here, but it's an earnings setup. You kind of want something a little bit more in open water like that. That play worked out masterfully. Nice rip on DuPont. Would have caught it clean, would have stopped out at the low. We were just respected all our buyers here, so a little wider, but you would want to be aware of that anyway, because it would have broke this resistance level over here. But over here, it's clean, or it's not clean. It's off earnings, so it's something to think about. Right, it would have ripped, and then yeah, it probably would have been this candle right here. Yeah, catch that on the blowout. 1 blowout, 2 blowout. Definitely get out. DQ. Going trend change here, but unbalanced volume not. So it's just one of those things that you just got to be careful, man. You don't. The beautiful thing about being in the markets is it's not like baseball. It's not like you have to take every play or you're out. You can just sit there at the plate and not swing until you get the perfect pitch. And when you get the perfect pitch, you rip it. What does that look like? It looks like Carter, Palantir, Tesla. Just wait. Just patience is really your biggest strength in this game. I'm telling you. But for this guy, not anything that makes me write home to mom. Right? It just has a trend change, and even the break above the high was a pullback on the week. So really the only thing it has going for it is the fact that it does have the trend change. We want a little bit more than that, right? RTX though, ooh, looking nice. We like this, right? Why do we like this? We like this for 2, 3, and 4 reasons. Let's go over that now. Let's dive in. We actually are in this, so we're gonna maximize here. So on the weekly, what do you see? Very nice push, sideways push, nice pullback. It's not too aggressive on the pullback, right? Steady into there. But the good news is, one, unbalanced volume is decent. Two, it is respecting the 21 period moving average on its pullback. Three, it did break the previous week's high and it's above the 8 period moving average. So all those check out so far. That's kind of a baseball that we are like, ooh, weekly looking good, right? Now on the daily, even better. After the pullback, there was a setup where it did have some follow through. Nice. It also came back and respected that same level, and it's respected it here. It's kind of respected it up here, here, and here. So we can almost tag that yellow just as a cautionary. Hey, this is a position that the market does like to respect. Actually, it has a yellow right there. I don't know what's going on with that. Can we condense? Yes, we can. Okay. Yeah, it pivoted here as a yellow. Yeah, this is a new yellow. Not too often do we get a double yellow, or we can almost change that to white. What we'll do is we'll modify. Can we do that? Does that work? That works. Okay. It's not an exact science, guys. It's a work in progress. Okay. But it still holds true, right? Bounces up, fair value comes, settles there. Cool. Rotates, respects this level. You can almost make this a level as well. So that's what we'll do. Where the market respects. It's really for us to identify where is potential danger, where will the market kind of respect those levels. We'll go ahead and take another position or another line here. Boom. And then we'll take another one here. Boom. And of course, that'll be red. Boom. Right? Shout out to it. With so what is Raytheon? And then we'll kind of actually take a peek at what Raytheon is. Here we go. So you guys can see. Go to the insight here. RTX. Cool. So your RTX tab is what is Raytheon? For those who don't know, kind of in the aerospace defense area. So RTX Corporation's aerospace defense company provides systems services for commercial, military, and government customers, right? They provide boom booms to the big old Uncle Sam, right? And as you can see, yeah, debt's going to be high because it is what it is, but cash, not bad. Let's go look at these dividends, constantly increasing. Sign of a very healthy company, I'd like to say. Free cash flow is kind of starting to increase as well. So we like that. I don't know what happened in the first quarter of 2024, but hopefully that adjusts itself, right? They have been in business because of what's going on in other parts of the world that shall not be named, where there's active conflict, right? But revenues. This is the lifeblood of any business, and as you can see, revenues are at all-time highs. So when you talk about lifeblood and getting a position for a company with a nice setup and decent EBITDA with decent revenue, it's kind of what you want to see. Price being an all-time high, revenue being an all-time high, free cash flow kind of being up there, dividends showing strength, right? Net income showing strength, or relative strength, right? I mean, there's a lot of strength. 1.4 billion. A lot more duckies than I have, but shout out to them. Let's see here. Cutting on some of the expenses, so that's good. Negative expenses there. I don't know how that's possible, but hey, more power to them. Maybe that's an accounting error. But guys, this is our Sunday recap. If you guys like what you guys been seeing, make sure you tap in to the channel, like, comment, and subscribe for sure. Check out some of the last week's video. Find out how it compares to this one. We do like to make these recaps. They do kind of run a little longer, but we like to cover some of the best of the best. So please, by all means, if you guys have questions, hit me up in the comments, because I love talking about this stuff. But I will tell you that it's a lot better when you're talking with other people. That's for sure. So blast me, let me know what's going on, and hopefully have some good profits to show you guys in the future. It's your boy, MC Fire. You guys have a good day, and goodbye. Peace.